Good evening, everybody, and welcome to our webinar. We're excited to be with you this evening, and welcome to my panelists. On the line with us tonight, we've got Willem van der Post, back by popular demand. He really set the bar high last week, so we look forward to the knowledge that he's going to impart. We've got Ken Williams, who's going to speak to Fintech, and we look forward to his message as well. He's telling us that he's only going to present for 10 minutes. I seriously doubt that. He's got so much knowledge to share, so we look forward to that. And of course, everybody knows Scott. He needs no introduction. But thank you to everyone as they are joining. We really appreciate you spending the next hour or so with us. As usual, I'm going to be in the background answering questions online and also making sure that our panelists get to your questions. So let's start with you telling us where you're joining us from. Last week we had people from all over the world. We even had someone who joined us from Peru, which I have never seen before. So we look forward to finding out where you are. So please just pop a hi into our chat box and let us see where you're coming in from. We'd really appreciate that. And with that, I'll hand over to Scott.
Awesome. Well, thank you very much, Lee. And Lee got some good news yesterday, so everyone has to collectively hold thumbs for Lee that hopefully she's flying to Dubai on Tuesday and finally leaving the South African shores after being kidnapped by our country for the best part of nearly 6 months. When people complain about their lockdown, consider being away from your home for 6 months pretty much. So sending collective wishes, Lee, that all comes through and that the next webinar we have will be from Saudi Arabia.
I look forward to that, Scott, and I'm sure by then I'm going to be saying, instead of saying jeepers, it's so cold, I'm going to be saying holy cow, it's so hot. But I do thank you very much. I do look forward to coming to you live from Saudi pretty soon.
Awesome. So let's rock and roll here. And what I really wanted to just share with people is that we're running a series of webinars over the next 2 months on how to be financially resilient in the current COVID-19 economic environment. I think really what we want to do and what we want to focus on, and firstly, before we get started, is to say thank you to our partners. One is Calio Capital. They are a family office that helps 80 plus of the wealthiest families in South Africa and in America. In fact, I heard today another family they're helping that I've been working with for over 10 years, and really, really good, solid partners in the wealth asset management space. American Dream have helped about plus minus 400 people actually immigrate to America, get their EB-5, get their green card, including Hilda Lunderstead, who many of you have heard of, Martin Freeman, and pretty much every other person that I know that's moved to America has moved through this company. And so, you know, they deal with high net worth, you know, families that want to immigrate to America. And, you know, again, a great partnership with American Dream. And then Cashbox and the team in terms of Chad and Andrew. And again, just to remind you, next week, Wednesday, we've actually got a webinar with Chad and Andrew, which is all going to be focused on structured notes and where the world is changing. And I'm going to show you tonight, and remind me if I forget, around a product offering they're bringing from Credit Suisse, which is really, really interesting. I think tonight, our two guests, if you weren't on the webinar, and I'd actually love to see if people could just put in the chat box, were you here last week, yes or no? Because I know Willem asked us the question, and I think for Willem and I, it's also important just to know how many people were here last week and how many we need to sort of repeat. So as I was worried about Willem, you can see we've got half yeses and half no's. So that pretty much answers that question for us. So, I mean, just to explain who Willem is, he's a chartered accountant, one of the youngest partners at Deloitte. He spent his first stage in the financial services and thereafter became managing partner at Deloitte for Center of the Edge, which was an exponential technology and innovation unit focused on discovering new business models and commercial opportunities. He was involved in early stage thinking around reusing space rockets, orbital flight, and that all sounds very fancy. What I think is much more interesting is that he's actually been into space. So I always challenge anyone, have you been into space? And then he also brought Singularity University to South Africa. So I've had the privilege of attending Singularity University in Silicon Valley, and it's pretty much the top exponential technology university in the world, you know, run on the NASA campus and some of the biggest names in the space. And he brought that to Africa. And then since leaving Deloitte, has founded a technology venture firm that really just invests in exponential organizations. So that's really Willem's understanding and pedigree. I think one of the reasons we enjoy doing webinars with Willem, and we've done live events he was reminding me that we've actually done it on 4 different continents together, is that for me, the space is interesting and exciting, but few people can bring it to life like you do, Willem. And it really helps people go into the future, come back into today's reality, and then know how it's going to impact them. So, again, very grateful to have you online. Thanks to Lee for organizing. And last week we had overwhelming complaints from 2 types of people. One is that we were completely full on Zoom, and so people couldn't actually get on live. And secondly, that they couldn't get enough of you, and so could we please have you back? So thanks for returning.
Thanks very much for having me, Scott. Nice to be here with you and Ken, and to all the yeses, nice to see you again, and to all the no's, I hope that we can have some fun tonight.
Excellent. And our other guest is Ken. Ken and I, funny enough, Ken was just, what's that word? Reminiscing about actually very on in his journey with Wealth Migrate was when Willem actually came over in 2017 and spoke in London. And I think Ken was as amazed as I was and everyone else in the room as to the way Willem spoke about exponential technologies and where the world was going. Ken lives in London. He's coming to you from London. He's an investment banker, spent 20 plus years there. What intrigued him when he left the investment banking space was the whole rise of fintech. And I think tonight we're going to talk about that. He has invested in this company as an angel investor. He also came on board and has really helped us with regards to our strategic financing. He's got a NED role, which is a non-executive director role. And I think probably the part where I have really asked Ken for help is that we're sitting on a great opportunity, but it's all about mapping out that journey to IPO, how to actually do it. And having raised, I don't know the exact number, Ken, but I think it's about $8 billion across 86 transactions. You've been there, done that, got the t-shirt in terms of the space and helping entrepreneurs like myself that have never IPO'd a company navigate that journey. So welcome, Ken. It's wonderful to have you online and be joining us tonight with Willem.
Yeah, thanks, Scott, and thanks, Willem. Very excited to be with Willem again. We had such a fantastic presentation here with Willem. People were just so excited about his views on the whole sector. And what I found, from my banking side is really a lot of people came out of banking and morphed into fintech. I was always interested in property and real estate with my own partnership down in the southeast of England. And meeting Scott, back when, and looking at this very exciting business and very exciting individual, I just wanted to be part of both. So first time I've been back on with Willem, so can't wait to hear what he has to say. Thanks for including me.
Awesome. So before I segue into Willem and Ken, what I did want to just share for those who weren't here last week is I stole these from Willem. He's going to talk to you about OfferNet. And basically, in simple terms, what is your digital transformation strategy and who is driving it? And it's really interesting because the research coming out is that COVID-19 is driving this process. There's some great research which Willem brought out in terms of the top CEOs and the top businesses. And literally 3 or 4 months ago, 95% of those, 3 or 4 months ago, 60% of those CEOs believed that digital transformation was a top 10 priority. Now, today, 95% of them believe that it's a top 3 priority. Many people are buying online, whether they like it or not. And it's changed the way that we operate. Whether we like it or not, it is a fundamental fact. And I talk a lot about the adoption curve and how when you start out in the beginning, someone likes to do something like me. I got a cell phone in 1999. And it was a smartphone, and my mom said that I was extravagant. Well, the bottom line is I got it because of pleasure. I liked it. I like gadgets. I like the future. I wanted to test it. It would make my life more pleasurable. But to be honest, people actually move 4 times more away from pain than they do towards pleasure. So, we're going to talk later about exponential organizations, and we've been on Zoom as an example for many, many years. And yet many people didn't join the likes of Zoom or other collaborative systems, not because they didn't know about them, but because they didn't really want to. And then suddenly you get COVID come along and they had to, they were forced to. The pain drove them to the adoption. So what we're going to share tonight is this acceleration of this digital transformation, whether we like it or not. When we look in the media, there's some amazing media reports that I wanted to share with you. And I was on a fascinating webinar with Roger Hamilton, who's someone I've worked with for probably nearly 10 years now. And just some links that he was sharing with me, which I found fascinating, is that really the wealth that's being created at the moment, and it has been for probably more than 10 years now, has been in the technology space. Jeff Bezos has a new net worth of 172 billion and is the world's wealthiest person. And that was literally in July. Elon Musk is now worth more than Warren Buffett, as his Tesla stock has soared. And this is really interesting because a lot of people think Tesla's a car company, but it's actually not. It's a technology company. And then if you look here, there's been massive investment by Google, Facebook, and Amazon and Apple into India. Because of some of the challenges between America and China, there's been a massive focus in terms of India, and there's been so much money created in China in the last 10 to 20 years in the technology space. India is the next frontier in terms of where things are going. And then for those of you a little bit more local, there's a guy called Magnus Haystack, and it's really interesting is that he literally went and said here that as early as 2011, after returning from an international conference in America, I started recommending offshore investment into fast-growing sectors such as technology and biotechnology. And he goes on down the bottom here to say, I can share this article with you, and I will put these articles into the chat box. He made a point that excluding Naspers, the total market capitalization of the JSE is less than 1 trillion. That is smaller than any of the 3 largest companies in the US, Microsoft, Amazon, and Alphabet, which is Google. And so the last thing I wanted to say is that, he talks all about the returns here. But what's also interesting, if you're wanting to compare property, and I know tonight's not about property, but our residential properties in South Africa have lost 25% in real terms, in Rand terms, and 50% in US terms. So tonight we're going to talk not only about technology, but we're also going to talk about alternative investment strategies and how to do it safely and simply. And, when someone like Magnus continues to go on about it, what is really interesting is he got back about 4 months ago. He wrote an article and said it's absolutely one of the number one things you should be doing is investing in offshore property, but it's too expensive for most people. And I wrote back and I said, well, now using technology, you can do it safely and simply and literally from $1,000. So what's it all about? Well, Ray Dalio, who's one of the wealthiest, most successful people in the world, says the most important thing now is to diversify across countries, currencies, and assets. And to conclude before I hand over to Willem, I love this quote that I heard a couple of days ago. The leader is the one who is out of the clutter brings simplicity, out of discord brings harmony, and out of difficulty brings opportunity. And I thought it's such a good way to interlude into tonight's presentation, because that's exactly where we are. There's a huge amount of information on the internet around exponential technologies, and it gives us clutter. There's a lot of discord and concern about where the world is going. And there's even difficulty that's being created by COVID. But where is the opportunity? Where is the harmony? And how do we give you that simplicity? I want to leave you with 3 truths. The world is clearly gone high tech. We all understand that. But you still need the high touch component. I will talk later about Wealth 5.0. I shared a lot about it last week. I will talk about it more later, because it's not just about high tech, it's also about high touch. It's easier nowadays to own a global business than it is to, start and run a local business. And thirdly, there's no better time like now than to actually get started. COVID has created this incredible opportunity for all of us in this digital space. And that's why we talk so much about Wealth 5.0. By the way, we haven't just been talking about this since COVID. We've been talking about this for at least the last 18 months. I will share with you later about Society 5.0, Wealth 5.0. I'm also going to share with you about a meta marketplace. If you could go back 20 or 25 years ago and know what Amazon was going to do, wouldn't you like to have participated in it? Well, tonight I'm not going to tell you to participate, but I am going to share with you an opportunity where possibly you might say, this is the future of investing. This is the future of property. This is the future of wealth. How would I participate? And how do you take these trends that Willem and Ken are going to talk about and actually be able to get involved? And that's why we joke with people, we believe that just like you've got an Amazon of retail, why could there not be an Amazon of private wealth? And with that, I will be talking about that later once we've heard from these 2 esteemed gentlemen. So with that, Willem, I wanted to hand over to you. Tonight, we really wanted to focus on, You know, you spoke last week about the 16 different exponential technologies. We wanted to get it a bit tighter tonight. And again, if people weren't able to watch last week, you know, I highly recommend watching the recording, because what Willem tried to do last week was give the overall synthesis of exponential technologies. Tonight, we're going tighter. We're looking at the paradigms within the fintech space and three secrets to the future. So I'm going to stop sharing and hand over to you, Willem. I look forward to hearing all about it and seeing what you've got up your sleeve this evening.
All righty, Scott, thanks, man. That was a lacquer intro. Thanks for giving us good cadence and good energy. What you also need to give me is screen sharing abilities. Please.
Lee, can you do that?
Okay, and so just so that people at home understand why I'm not looking necessarily at the camera directly, is I've got 4 screens here. It looks like CNN. And I'm never sure when I start screen share as to which screen it's going to share on. So it's always a surprise to me.
You should be able to do it.
Okay, I got screen share. Here we go. And number 2, I think it is. Yeah, and maximize. Is that working? There we go. All right. So Scott asked me to delve a little bit deeper into venture building. The synopsis of last week was that a lot of technology forces are impacting business models. They cause what the consultants have now disseminated as a term. They cause disruption. You know, just on the side, disruption is a little bit like the word awesome. It's largely overused and typically grammatically incorrectly. But anyway, these forces are causing all these changes. And inside of the change, there's 2 perspectives. There's the perspective of threat, risk, or the perspective of opportunity, upside. And largely I was talking about how disruption causes these opportunities if you are attuned to it. Tonight I'm not going into the actual technologies themselves. I'm going to be talking about venture building. And what I want to do is peel back the layer, perhaps of an arena that not many people have access to in their day-to-day lives, which in my case now is I'm going to share with you what I've learned out of the venture capital space. As you heard, I used to be an audit partner. So we were worried about risk. And then I was a consulting guy, which means I made spreadsheets that try to get you to buy SAP from us. And now, of course, stopped making PowerPoints and starting to invest in a portfolio of technology assets. And these are not assets that you buy over the counter on a stock exchange. These are assets that you buy hopefully long before the stock exchange. But how do you do it? How do you peel back that layer of what really has value, what really has promise? I think in all of our lives at some stage, we've been confronted with an opportunity where someone brings a great idea around a coffee table, at a braai, casual meeting, and there's perhaps some sort of a PowerPoint that solicits for money. And then you always wonder, hell, if these guys turn out to be Uber, obviously I want to be in. But if they're going to turn out to be like 90% of investment opportunities, then I don't want to be in because I'll lose my money. How do we do it? What do we look for? And let me just caveat everything that I'm about to show you from our Exponentials world and say that it's not perfect. If it were perfect, someone would have codified it and we would have all been loaded. It's not. It's imperfect. And there are some elements that you can perhaps increase your upside or decrease your risk side. And tonight is not about an investment lecture either. I'm just going to show you some of the things that we look at. There are 3 main things inside of this ingredient. If I had to classify them, those are the 3 secrets, if you like. Secrets are just unexplored knowledge bases. And with the internet today, there's no excuse for not having access to a knowledge base or knowing about it if you so wished, because all information really has now become readily available. This is one of the issues that we have with the education system. And by the way, something that I always punt, in conjunction with this education system, some of the stuff that I show you tonight, we teach to kids in the school that we've built. I say school, it's not really a school, it's more a parallel program or a micro school. It's how we're trying to reimagine where schools are going. And it's aimed at formative years of kids. So late primary school, early high school. Typically, as a South African, I can say this, I know that we've got a culture of being confronted with challenges, of which we've got a lot, but the culture is by default to bitch about it from the comfort of the couch, not to get up and do something about it. And ultimately that perspective and attitudinal tuned inness spills over into kids, together with the education regime, which to this day, for some reason, remains knowledge-based and case study-based. And we beat the creativity out of kids and saddle them with responsibility that eradicates their naivety. And before you know it, you've got compliance people that try to fit into a job. And all these technology forces that are coming our way are reshaping what the future world will reward as contribution. In other words, jobs are going to change. We don't know how, because no one's got the lottery number, but we know that it will change. And yet we persist in the old methodology of schooling kids, hoping that after 3 years in an honors degree, they're going to come out and somehow be compatible with the world. We just moved on. So our school takes the paradigm of bitching about problems, and we juxtapose that with an entrepreneurial mind. If there are issues that bulks of people are complaining about, it's actually a flag that behind that complaining sits a market of people who are willing to pay for the solution to the problem that they're so passionate about, such that they're bitching about it. So there are buyers. All that you need to do is harness the solution for this. The advent of exponential technologies allow almost anyone on the planet access, because the unit costs are so low and the capability is so great, and it's mostly digitized, which means you can get it over a laptop. So if you're somehow able to marry this fresh perspective of opportunity with the capability of technology, you can make a business that serves society with a profit. We are not charity driven. There's great benevolence in charity, but it's a bad business model, because profit is what keeps a business model alive. So we don't say get greedy and pull the ring out of it. We say a reasonable profit is sustainable. And if that profit is made in serving societal issues, you've got a massive business. And so when the kids go through the school and they make these types of businesses, from a fund perspective, we put money behind them because we want to incentivize job creation and societal serving. And I'll get off my soapbox now, but just think of this. The organizations that employ 150,000 people aren't going to go to 300,000. In fact, if anything, with the advent of advanced automation and additive manufacturing, nanotech, robots, you're likely to find the opposite. The job numbers are going to come down. But we can incentivize, fund, and facilitate entrepreneurs. And if we can make 50,000 of them and each of them make 3 jobs, well, then the offset of the large organization shrinking is taken up. At least the talented people will be. Those that are proactive and talented will be absorbed into these entrepreneurial ventures, which is why it's, of course, so important to live economic scenarios out of slumps that we find currently. All right, so that's my soapbox. Part of that will fill into tonight. And I say there's 3 things. There's a bit of science, there's perspective, and then there's a bit of luck. And I'll talk about each of those. First, let's just deal with perspective. If you are looking for these venture building opportunities, and I'm not saying as an investor per se, I'm saying as a venture building opportunity. That could be through sweat capital, that could be through putting money into opportunities, whichever. Perspective is an important thing. And what we see, both from a corporate CEO perspective, which I discussed last week, C-suite rather, that I discussed last week, as well as venture building, there are a couple of personas or mind frames or perspectives and paradigms that come to the fore. Last week I asked, what do you think this is? And someone in the chat box typed, oh, that's Corona, it's a virus. If you're thinking this is a virus, then you are so wrong that you're almost right again. You've almost gone full circle, because this is an antibody. This is the device physiologically that lives in the human body, that looks for change or disruption to the status quo, quietly roams the planes of the body. And when it finds these forces that cause change, it attacks it and kills it. This is the naysayer. This is the person that when cryptocurrencies came about, even though there was an inflated expectation about we're going to be earning our salaries and paying off our cars with cryptocurrency, was saying this will never work, it will never work, it will never work. The price grew, the thing hit $20,000. It was a December or a January 2 years ago. The bottom fell out and it went back to $3,500. And of course, a whole bunch of enthusiastic people got on board when it was like $18,000. So they lost the difference between 18 and 3,500 per coin that they bought. And the antibodies have a field day when that occurs, because they say, I told you so, change won't happen. This is all nonsense. It's hype, it's novelty, it's et cetera, et cetera, et cetera. Now, what opportunities do you think an antibody mindset allows you to spot? Not many. In fact, I can't think of any. So important to know and self-assess whether or not I go into this mind frame when I'm looking at opportunities. Another opportunity, I used this slide last week as well, is the hostage. Now, this might be someone that's in an economic corner. Perhaps cash flow has dried up because of this COVID scenario. There haven't been investments into opportunity generating, which means that you're out of options and now you feel like a caged animal, a hostage of your scenario or your situation. Typically desperate. And desperate people will do irrational things with their money and with their time when it comes to venture building and seeking out opportunities. So careful of this. This is another one. I also used this slide last week. It's the PhD. It's the person that thinks that they know everything. And it's so important to retain your humility and your humbleness, your intellectual humbleness when you're looking at this stuff, because no one on this planet knows everything. And no one on this planet can fool everyone all the time. And as a consequence, don't adopt this mindset when we're looking at opportunities. Rather do the opposite. I'm a student and not a PhD. I'm here to learn and absorb and garner as much information as possible about these opportunities. And I say this, ladies and gents, because the moment that ego switches on, this is typically the persona that comes to the fore. When fear comes to the fore, it's typically the antibody or the hostage. And then this is the person that got into Bitcoin at $18,000 when the bubble was about to pop. Super enthusiastic, lots of energy, typically audibly quite loud, but not necessarily scientific or prepared to look at the opportunities in a mature manner. And all of these personalities in some form or another hold pros and cons, but be careful of yourself is the message that I wanted to bring across. Firstly, self-awareness. Know thyself. Understand which mind frame I'm in. Why is it that so many people, if you look at data of transaction flow, conduct shared transactions late at night, like at 11 o'clock at night, when most of your good decision-making bandwidth for the day has been used up, perhaps feeling desperate, perhaps feeling that there's a trend that you're not a part of, FOMO, and then all of a sudden putting nest egg fragments onto investments that aren't thought through, and it's this infection from the paradigm that's inappropriate. So know thyself and be careful of yourself when it comes to this. The human condition dictates that we undergo these pendulum swings in our emotion. Notice I say emotion, not your rational thinking as to how to evaluate. A little bit of a lag from when a trigger ensues. This is when drones first came out, or cryptocurrency, or the blockchain. And before you know it, the bandwagon is out there, momentum is garnered. And before long, we've got this peak of inflated expectations. When we don't earn our salaries in crypto, or pay our cars in crypto, or have all media rights managed by blockchain, we start a downward trend. And quickly that downward trend starts to pick up momentum, almost like an avalanche. And then it goes too far. It gets into the trough of disillusionment, which is where the naysayers and the antibodies are very happy that it failed. But of course, the technology or the trend in the background continues to mature as it learns from its mistakes, as the founders remain persistent, as capital flow follows growth opportunity and the maturity ensues. And the question, of course, is how do we shortcut this wild peak pendulum as well as the other side of the pendulum, which is the trough? And how do we shortcut ourselves to maturity? And a lot of that is as simple as awareness of the fact that I'm entering an emotional thinking pattern, and to distill for that. So perspective, super important. Let's talk about the science of venture building. There's no science. There's no perfect science, I'd rather say. Everything that I will show you will still have an element of risk to it, but you can manage the risk by looking at some of the things that have been learned in the space of early stage venture building. You know this number, 110-1. I first, like you hear this in hallways or casual conversations at a braai, but my first formal head bump with this was in Palo Alto, in one of the world's most successful startup incubators, where the 110-1 is on the walls. And I asked someone, is that the failure rate of venture? And they said, yeah, absolutely. 100 people talk about starting a venture, building it. 10 people actually convert into action. 1 is successful. And that's a fascinating thing. This is where the misconception is around that a venture portfolio will have 20 investments in it, 19 will fail, and 1 will make up for the 19 plus 50% IRR. It's nonsense. I'll show you something interesting. I want to talk specifically about this cluster here. the 9 that end up not making it out of the 10. And if you zoom into it and you dig around a little bit, there are 7 that have a very interesting pattern as to why they fail. Let's talk about that 7 just really quickly. I'm going to show you the reasons for why the 7 out of the 9 that don't make it fail. First reason is not the business model, not the funding, not the team. It's none of that. Commercials work, but they don't have access to market. There isn't someone who they can provide their service to, issue an invoice to, and collect cash for it. It could be the greatest product. It could be the greatest team. They have all the funding in the world, but somehow their access to the market remains blocked. Second reason is access to market. The third reason is access to the market. In fact, all 7 reasons, 7 out of 9 of the 10 that start fail for the same reason. They don't have access to the market. Your ability to bring your investment and a market together can therefore dramatically increase your ROI. Think about this. I'll go back. If venture portfolios are ordinarily successful because of 20 bets that you place, 19 that fail and 1 that makes it, or if you hold to these metrics, 1 out of 10, 2 out of 20. But you could give access to the market for 7 of the 9 that fail. You're upping your venture returns by 140x. Just think about that. Think about putting 10,000 Rand into something and 140xing it. That is significant. And if access to market is the main thing, why is it that most investors outsource this function solely to the leadership or the C-suite of the organization? Sit back and think about that for a sec. You've gone through all the trouble of finding an investment that you believe, or an opportunity to build venture that you believe to be good. And finally, when you put your money to it, you wash your hands and you stand back and you say, they've got it. What if you could up your chances by virtue of participating in that access to market and easing it? It's the most fascinating thing to me. Imagine if the company and its investors collectively worked on taking access to market and getting the barriers out of the way. And this has happened in the world. Let me show you the next slide here. What you see there is Tesla and Paul Roos. And I will ask you, what is the similarity between a Tesla driver and someone that's gone to Paul Roos? Well, the similarity is they'll tell you. I like to take a dig at Paul Roos because I didn't go there. It's a little bit of jealousy if I'm dead honest with you. But let's talk about Tesla for a second, right? This is a company that has as its purpose to transition the world to alternative energy. That's why they exist. It's not a car company. Scott mentioned that it's a technology company rather. Yes, it is. With a purpose to transition the planet to non-renewable resources, given that we've got one place as a species on which we can live. And if we cock this up environmentally, it means it becomes uninhabitable. So it's a pretty important, pretty global challenge that they're trying to solve. And it's therefore no wonder that they've accrued the interest and the evangelism of a group of followers that are so proud about the fact that they're involved with this, A, great product, but B, even greater purpose that they're supporting, which is why they'll tell you, which if you think about it, really is access to market. And therefore no surprise that the share price has done what I've depicted for you there. It's an exponential growth company. It is an EXO. Look at this. It accounts for actually only 1.1% of the total market share in the US, but it's bigger than all those other companies. How on earth is it possible that if you're only 1.1% of the market, that you're bigger than anyone else in your market? And of course, the reason for that is that the capital markets have woken up. The formal capital markets have woken up to this exponential revolution that's going on underneath us. They don't necessarily understand the 16 technologies or can name them, but from a capital perspective, they know that this is shaking and moving. And check this out. Share prices over time have started to shift away from being priced according to the tangible assets that are controlled by an enterprise. This is the old school, or maybe a different way of saying it. You've seen the Buffett and Musk debates that are happening online, where one of the old school is an advocate of moats. Have NDAs, restraints of trades, non-disclosure agreements, own the assets, protect the IP, make it only mine, and in there lies the value. That's one perspective. The new perspective is open it up. One of the first things that Musk did, and I don't want to sound like a Musk groupie, but one of the first things that Musk did is when he created the patents around electric vehicles, he floated those patents on the open market and said, anyone can use this free of charge. Just use it. Why? Because it stimulates a much broader market adoption of EV, electric vehicles. And in there lies the ability to grow. Because if only 5 people want electric cars, makes no sense. There's no growth in that. But if the entire market realizes that they want this, A, and B, can do this because I've just given you the designs for it, well, then that opens up the whole planet as my market, not just to be a big player in North America. And so what you'll see through this graph is that over time, that has dawned on the capital markets. And now it's way more about the intangible value associated with your enterprise. And the majority of that intangible value is related to the perception of the market of your ability to grow. In other words, how much they believe you've got upside for. So if I go back one slide, if you only have 1.1%, but there's a global market for it, hell, then if you get 50% of the market, then there's a 50x sitting on your share price. And that's why it accrues these premiums. More so if it's led by an enigmatic guy who can talk to the market, attract capital and evangelists, and it solves a global issue. You really have to almost trip over your feet to get this wrong. It's no wonder. I saw this morning, Musk has now unlocked another tranche of his remuneration. He's now going to get another $2.1 billion US over and above the $800 million that he was paid not too long ago. And of course, that sits oddly with a whole bunch of people that are used to the old way of doing things, which is why you've got the shareholder activists saying, we need to get rid of this guy. I say pay him more because he's busy building this value and this absolute growth mind that he's got as a perspective. Again, perspective. Now, this is interesting. I got this from John Hagel. This is something that we do in the fund and that we look for CEOs to do when they take control of assets inside of our fund. Zoom out, zoom in. Very simple. Think about the zooming out. We don't start with where we are. We start with where is the world going and where is it going to be in 20 years from now? We used to have that argument in 50 years, but I think exponentials plus COVID has supercharged the mean time until impact of these technology forces. So you've got to go shorter. It's like 20 years, maybe 25. What does the world look like in 20 to 25 years from now? And if you don't have a grasp on what the forces are that are shaping that world, then get involved in reading around exponential technologies and what they're doing in the world. This is the likes of nanotech, quantum computing, additive manufacturing, advanced materials, digital biology, stuff like that. So form a picture of where the world's going. Inside of that world, as you are zoomed out into that time frame, what will the consumers in that world want? And then lastly, what do companies look like in that future that serve those future consumers in that future context? It's not a 5-minute exercise. You run sessions around this. You develop your view around this. And once you have that, zoom back in immediately and then ask yourself, what can we do in the next 6 months? Start and complete in the next 6 months that puts us on a trajectory to hit that future successfully. And we, as investors, look for teams where the CEOs are talking this language. In 20 years, where will we be? What have I got to do today? And finish within 6 months. And then do that same exercise again. Re-zoom out. Where are we now? Re-zoom in. What are the 2 or 3 things that I can do now? And this is how they break inertia and how they get market traction. Ask yourself this on the previous slide, this one here. Is there a future in 20 years? Is there any conceivable scenario in which you've got non-electric vehicles, so fossil burning vehicles? I'm telling you, I think personally, I think it's going to be illegal to drive something that induces pollution. Combustion engine, we're burning the planet. So if you see that as a trend, then it's pretty clear that we have to go the route of EVs, hopefully autonomous EVs, and that therefore the next 6 months and how we attack our market and talk about open source and talk about the advancements in battery, all of those are the things that provide value because the market perceives that as something that will cause growth. This is going to be an exponential organization. And I'll place a bet, not a betting man per se, but like verbally, I'll place a bet. I think that this share price graph that I'm going to show you here will be flattened relative in the next 20 years as more and more and more of the world starts not only adopt, but enforce electric vehicles. Zoom out, zoom in. The next thing around the science part is that timing matters, ladies and gents. Once a share is listed, you find that typically it's MBAs that take over the reins. And I say this with the greatest respect. I don't have an MBA. I really wanted one at some point in my life, but I don't have one. So this is not a jealousy thing at all. But what I've seen is that even the epitome of the pedigree in academic institutions worldwide, the best of the best use case methodology still to this day. And case methodology by its very nature is inherently retrospective. Here is a scenario that had already occurred. Here is what people did that made them successful in that scenario, or here's what they did that made them unsuccessful in that scenario. Plug 10,000 of those into your head, and then hopefully what you're confronted with when you're at the steer of an organization resembles one of those scenarios, and you can flip back in the textbook as to how to deal with it. Once a share hits listing, there's a lot of efficiency and a lot of process and governance and institutional evolution that takes place that stints growth. And so you're lucky to find shares that do double-digit growth outside of anomalies like COVID in the ordinary course of business. That's why pension funds invest in them, because it's a stable long-term return. The real returns, together with the risk, sits in early stage. And what I've drawn here for you is two graphs that essentially are almost inverted. They're not entirely, but they are inverted. And this talks about the maturity or the age of the enterprise or the venture that you're looking at either co-building or investing in, and the concomitant returns. If someone shows you a PowerPoint, if you saw the Uber PowerPoint and you decided to back it, you probably made 1,000x on your money. By the 6th or the 7th round, as more investors had gotten into this and there was more institution, the cost started to incur and marketing needed to happen and all of the like, you find that there's still massive return. You're talking 600x and 500x. But it's certainly half of what it could have been had you backed it at PowerPoint stage. Do you back it at PowerPoint stage? Sure. How would you know? What do you look for? If it's not your ordinary course of business, you lose your shirt. So it's not something that financial advisors have access to because it's not structured products that give commissions. So this is not something also that has a lot of deal flow exposure to ordinary man in the street. Where do you find the ventures to invest in? Like, do you have 10 of those coming across your desk because people know that you've got capital and they want it? So it's a tough thing. So timing matters. You don't want to get in too early. You certainly don't want to get in once the ride is over. You want to time it just right after that preparation phase. And then another interesting thing, just talking about crisis, I thought I would pick this out for you. I've done 2 baskets of shares here. And you'll notice on the time frame there that the white line is coinciding with the great financial crisis, the meltdown of the FS space, which actually gave rise to this steroids that we're now experiencing in the Fintech and InsurTech space. And what I've done here is to index the market share and the revenues of companies, and on the one hand, and on the other side, their marketing spend and their innovation spend. So on the left-hand side is a group of companies that when they were faced with this crisis, didn't hunker down. They proactively engaged the crisis. Their perspective was one that this crisis will reboot machines of the world, and we need to seize this as an opportunity. And so what you see there is the red is the innovation and the marketing spend. In other words, what are they spending on delivering more value to consumers through innovation? And what are they spending in terms of gaining access to market? And notice that when the crisis came, they increased that spend, sometimes up to 140% of what they used to spend. And 4 years later, when the dust had settled and it just started to reintroduce normality, they started building from 160% market share relative to what they had had. On the other side is the conventional wisdom. Hunker down. Let's save ourselves rich. Let's button the hatches. There are so many cliches that you can throw at this. And look at the companies that have effectively curtailed their innovation spend and curtailed their marketing spend to garner more consumers. They've taken it down to near zero. And look 4 years later what happened to their market share and revenues. They were lucky if it reached 60% of what it had been before. And of course, that's twofold. There are some companies that just totally die and some that have to contract and shrink in value and in activity set. Well, someone else needs to take this up. The world is increasing its population. It's not decreasing. So growth is still there. It's a matter of perspective and how your teams mobilize around the opportunity of a crisis. Here's the summarized version of the same slide. And you can see then, therefore, that ordinary, by the way, this pattern recurs through all of the crises, all of the different crises, all of the different events that we've had of a global destructive nature, depending again on your perspective. It represents a fork in the road, and how you choose to engage that ultimately has an echo effect, which from there creates market dominance or barely surviving. Those are the two scenarios that typically come out of this. Last part of the science that I just want to talk to you, and I know that Scott's going to touch on some of this. Back in the day, 2014, Salim Ismail started with a concept that he published in a book called Exponential Organizations. Exponential Organizations, by the way, was just a little bit interrupted with COVID in its sales. But if the trend pre-COVID continues post-COVID, then by next year, this should be the most sold business book in the history of the world. So really a good read if you haven't already gotten yourself a copy. Exponential Organizations by Salim Ismail. Now, Salim did research in North America and said there are companies that are head and shoulders above their competitors. Doesn't matter what financial metric you apply, whether it's dividend growth, customer acquisition, decrease of cost, revenue growth, market share, doesn't matter. Whatever you're measuring, this is clearly someone that's head and shoulders above the rest of the industry. What is the silver bullet? Because of course, if you can codify that, you can make billions of dollars. Same research was then perpetuated through a consortium in Europe. And then under their guidance, a team of mine actually did some of the research in the same research in 5 countries in Africa. And then we compared results. And what we found was the same thing. So this is the makeup of an exponential organization. I'll move my mouse over here. Interestingly, some of it's pretty damn common sense. I must be honest with you. Think about this. How does a company get ahead in product innovation if it doesn't ascribe to the concept of experimentation? How does a company think of a large bank or a large insurer and think of the last time, let's use insurance, let's think of the last time that you put a claim in. Do you remember all the red tape? And of course, there's for every rule, there's a dead sailor. So you understand why they're trying to manage fraud and risk and all of the like. But just think of the layers and layers of bureaucracy and red tape and admin around getting a claim settled, which is why, of course, the insurtech companies are attacking that pit. But if you don't have autonomy for your people to decide this is a valid claim, pay it, or not necessarily just claims, but making decisions that match the purpose of the organization, you slow down. And when you slow down, a faster, nimble, agile organization overtakes you in the market. So you can see this stuff is not really rocket science, but for some reason, we find that the majority of organizations in the world don't structure themselves according to this. Now, interesting thing out of the research, 2 interesting things. The first is not all of these attributes are appropriate. Depending on your industry or what you do, you might not want it. Example, if you want to be an exponential defense force or a military, you don't want to give too much autonomy and experimentation. Can you imagine a rogue general? I'm going to experiment. Let's see what happens if we invade North Korea. You don't want that. It's entirely inappropriate. Is it appropriate to do experimentation in your weapon development? Absolutely. Should you always ask for permission? No, within certain bounds, you should just have free reign because you know what we're trying to achieve. We're trying to be an exponential defense force. And so if leadership can clearly communicate the purpose of an organization, a lot of these other attributes start to naturally fall in place. So it's not rocket science. The second interesting thing, we couldn't find a single exponential performing organization that didn't have a purpose, an MTP. So if people know what the MTP is, then they can evangelize behind it. And this is what we look for when we say, is this an opportunity that we want to get involved in, either with finance or taking to market or both? Does everyone in this organization understand what the hell we're trying to achieve? Is it massive, global, scalable? Is it transformative? It will change the problem. And is it a purpose, your reason for existence? Not the slogan that an ad agency gave you to put underneath your logo, the thing that sounds cool or looks lacquer on the CSI pages. The reason for your existence. We transition the world to alternative energy. We solve the wealth gap. There is so much power behind this because if you don't have an articulated purpose, you don't get exponential results, predominantly because you have mercenaries, people that are only there for the money. If you have a purpose, you attract missionaries, people that will die in living the purpose. They will summit the mountain. And incidentally, I can just throw this in as a side comment. One of the things that we do is we take the founders cycling, if they're cyclists, but something that tests their endurance. And then we see if we give them crappy equipment, or it's uphill or it's warm, are they the type of people that abandon the mission? Are they the type of people that consider themselves victims and shortchanged? Or are they people that say persistence, perseverance, pushing through, I believe in the mission? It sounds like an HR thing. I promise you it's not. It's a commercial thing. Now, interestingly, I just threw this in as I wind down. I'm going to pretty soon give back to Scott. This is a QR code. If you hover your smartphone camera over this, I know that the iPhones do this. I don't know if the Androids do it. If you have an Android, why? But if you hover your camera over this, this is a survey that's conducted that actually measures the exponentialness of your organization. And Salim and I did this in the, for the JSE Top 40 a couple of years ago. And we took the results to market last year in March. I've got them here. I'm going to show them to you now. And it's out of 100. But for your own enterprise, whether you're employed by someone or whether you run your own enterprise, try this and have a little look-see at how exponentially ready you are or not. And one of the things that we do is we take this matrix and we apply it onto opportunities and we score it. Science. Not perfect science, but there is a method. Out of interest's sake, I'll show you this. This is the result of the top 40 for then. And it's low. Exponential organizations in specifically places like Israel, places like the Netherlands, almost said Dutchland, but that's Afrikaans. In the Netherlands and North America score upwards of 85. And our highest scoring enterprise was Discovery, which of course just makes so much sense if you look at what they're doing in the market and this result. And now again, I'll just show you perspective. Oh, we're in trouble, South Africa, third world. Or look at all that headroom. And if only we did one or two structuring things to get this EXO methodology and frameworks introduced to these organizations, holy cow, there's so much upside. There's an abundance of opportunity. Last interesting thing, don't waste a crisis. If you look at this is a 2018 grad of the private shares, so it's not listed yet, and the Billionaires Club. So not the Billionaires Club, the $1 Billion Valuation Club, the Unicorn Club, I think they called it, or the Zebra Club, some animal. If you trace back where these founders came from, a lot of them came out of financial institutions that had melted down in the great financial crisis. Took them a little bit of time in preparing, and that's that graph that I showed you about where you want to get involved in the opportunity. But the majority of these oaks were trapped in corporate before, sitting with the surety and therefore the psychological safety of money coming in every month through the form of a salary. And when that had evaporated, they were still young enough, still had talent, still had networks, were still passionate people, but it afforded them the opportunity to rejig their lives and pursue purposes, which all of these oaks have. And so can you see the wealth that had been created, the prosperity that had been created out of the reboot of the crisis? And so I'm not a motivational speaker by any stretch of the imagination, but I will say this. I think that is a critical thing to hang on to in a time like COVID, when loneliness ensues, economies are collapsing. We've got these very weird to understand rules about when you can move around, and like I can't visit my family, but I can ride in a taxi, like all these things that have got an economic and psychological impact. And it's easy to get sucked into that vortex. But again, be careful of yourself and know thyself. You don't want to become desperate, and you certainly don't want to become a naysayer. There is too much splendor in life to let that happen to yourself. So guard against it. And economically speaking, there's a hell of a lot of upside by adopting appropriate positivity and looking for these opportunities. I said there are three things. The last one is luck. Here's the slide on it. There's no such thing as luck. There is no slide for it. Luck is an equation. It's when opportunity meets preparation. I fundamentally believe that the opportunity that you're going to be presented with tonight, of a timing and quantum perspective, they don't come along often. In fact, this is quite rare. And if we are prepared, and I think Scott and his team has been preparing for this for a while, then maybe, if we apply some of these other methodologies and perspectives, just maybe we've got a trifecta of the three things that we as a business try to peel back and look for proactively. Very happy to talk a little bit more about this at the end. Maybe we get into a Q&A session if people want to stay on afterwards. But that is the shortest presentation I've ever done. Scott, back to you.
Thanks very much, Willem. It's quite funny. You and I are having some fun stealing from each other, sharing each other's stuff. And I was actually going to share with everyone the test that they could do later. So I will, for those that are around at the end, I will literally share, but obviously Willem's given you the link. I will say one thing though, that book that he was talking about is here at the end of this PDF doc that I'll share with everyone. And I'd recommend these other books, which are excellent in the whole space around this. So 0 to 1, Exponential Organizations, Bold, Behind the Cloud, and The Upstarts are pretty much the 5 best books in my opinion in the space. So I will share that with people. I want to just take what Willem said and to give you some practical analysis. So I spoke last week about Society 5.0, and I'm not going to go into a huge amount of detail, other than to say it came about from the Japanese. It's a whole concept of where the world is going. And then specifically, the UN came out that by 2030, there are 17 challenges that we actually crowdsourced it on the planet, 17 challenges we want to solve. And number one of them is poverty. It's the greatest challenge on this planet. And what's interesting is that, as Willem said, the whole concept was to become a unicorn, which is a $1 billion company. Actually now, it's about doing it sustainably, and it's about profit and purpose, and they call them zebras. And it just seems perfect that it's time for a zebra to come out of Africa, a real zebra. So what does it mean in terms of investors? Well, you know, you've got Society 5.0, you've got Investor 5.0. Investor 4.0 was all about getting capital from VCs, venture capitalists. Investor 5.0 is actually working with your community. Your growth is determined by your investors. I love what you said, Willem, about, you know, going to market, and actually if your consumers and your investors are using your product, then there's no better way to actually build a great company, which is why I'd recommend Behind the Cloud by Salesforce, because they were one of the first to do this back in 1999 and the 14th biggest technology company in the world now. And then lastly, impact investing, as Richard Branson says, is not just good, it's good for business. And you know, the whole concept around crowdfunding and people being able to participate all around a purpose. You don't have to be Mother Teresa anymore to go and change the world. You can actually go and change the world and make a profit at the same time. And that's really why when we did our crowdfunding raise with Cedars, we raised $2.5 million from 863 people in 43 countries. And what was so interesting is they resonated with our statement, making global property investment available to anyone, anywhere, from any amount, safe and simple. That was it. They didn't have to know who we were or what we were trying to achieve. And so Willem's given you exponential organizations, and I wanted to give you a quick review on what we think, basically. So right in the beginning, when we set up the company, we started the wealth movement, which was to create a better and more sustainable planet for all. There's 3 legs to that. The first leg is providing entrepreneurship training for children, because as Willem said, we're not going to change the world by putting people into corporate jobs. We're going to change it through entrepreneurship. The second is women and wealth. It's about empowering women. You know, there's a massive change and a huge opportunity in the world where with the whole feminine energy around coming together, working together, it's women and wealth. And the third is about empowering the 99% to be able to invest like the top 1% using technology and smart investing. And so our vision was to make investing as simple as a swipe of a finger. I always joke with people, and why a swipe of a finger? Well, because we're going into augmented reality and virtual reality and everything else. It actually won't be your mobile phone. Our mission is to allow the 99% to be able to invest like the top 1% using technology and smart investing. And really, when you take Wealth 5.0, your impact and your purpose is actually the #1 criteria. And what I can find, and you know, I've read the books and I've done the training, but I can't overemphasize for people, when you've got a massive transformative purpose, MTP, people come to you. People want to be part of it. Investors want to be part of it. Consumers want to be part of it. Even partners want to be part of it. We had a company about 3 years ago that was a $40 43-year-old company. They didn't need us. They raised all their capital from the stock market in America, New York. And they said they love the purpose and they want to empower and enable people to be able to participate. So if I give us a score in terms of this, I think our purpose is 10 out of 10 in terms of people actually buying in. It's the #1 challenge on the planet. In terms of interfaces, and again, I don't have time tonight to go into all the detail, but this is about how you talk to your consumers and how they can interact and create their own products. You know, as people know, they can go on the platform, they can choose what they want, they can create their own diversified portfolios, they've got their global wallets. And for me, I believe that we're probably an 8 out of 10 there. There's a lot more progress we can make, but there's a lot of interaction and interfaces already. In terms of dashboards, we've got a lot of dashboards that are built out behind the scenes. They're not good enough yet in terms of sharing them with all our consumers, with even our partners. And so I give us a 6 out of 10 in that space. In terms of experimentation, this one's classic, and Aubrey's actually here with me at the moment. You know, the digital marketing space is all about experimentation. It's actually called test, measure, predict, scale. And so what's so interesting is that, you know, we've done a whole experimentation in the digital marketing. We recently launched a whole campaign with one of Willem's companies called Offernet, which is all in the artificial intelligence within digital marketing. And it's all about experimentation to find cheaper ways to reach better quality clients. So again, a 6 out of 10. Autonomy, this one's fascinating for me because the principle of business, you know, in the old days, that they call it old power, top down, we've always tried to evolve the business in terms of having small autonomous groups. If you look in terms of our org structure, on the left, you've got decentralized and autonomy, where you're allowing business units to go out and create. And then on the right, you've got centralized and control, and that's finance and compliance and things that you need to run globally through a structure. 5 out of 10. Social, well, this one makes me laugh because when we had COVID, you know, a lot of companies, I know people that were COOs and it took them like a month to get the teams up and running. We didn't even skip a heartbeat. In fact, we're actually wondering why we had offices to start off with, because we use Slack, we use SharePoint, we use Trello, we even use a little website or platform that no one had heard of 3 or 4 months ago called Zoom. And I'd give us 8 out of 10 there. And then staff on demand, this one's amazing. You know, Ken and Megan have really driven this. We used to have 12 accountants, lawyers, or due diligence people in our company, 12. And we had 1.5 in tech, to put in perspective. Ken went and outsourced all of that to CCFO. All our financial and accounting at a global level is done by this firm called Creator CFO, and they specialize in fintech companies. And I've already spoken about Offernet. Rather than go and hire all the PhDs and all the digital marketing people, Aubrey, in his capacity, has worked with Willem, and now we've got an entire unit looking at this, where effectively we've only got 1 internal person. So again, 5 out of 10. Community and crowd is probably the one that I'm most passionate about. You know, we created our wealth collaboration eco honeycomb. Again, this came from Salim. I borrowed it, stole it, whichever way you want to take it, where a honeycomb is actually the strongest force in nature. And we built the entire company based on the principles of nature. So if you haven't got this, and I know it might be too small on your screen, reach out and put their honeycomb and make sure that one of the wealth consultants shares it with you. Because this is truly how you change the world. It's got business, it's got real estate, it's got technology, it's got the investors, it's got the vision and the mission, which is all the MTP stuff that Willem's talking about, and it's got ideas and scale, all in this document. We've obviously got all the different WhatsApp groups that people can participate in. We have regular meetups. We actually had them planned in London and in Dubai this year, but unfortunately COVID got the best of us. We've done weekends away, and I think, Willem, you've been to some of these weekends. Ken certainly has, where we love to get together around the world. And then really what's exciting with the meta marketplace and where the world is going is that we actually see this community and crowd always being local, but within a global framework. Think of it like TED Talks, where you've got local and you've got global coming together. And that's what a meta marketplace is all about. So I give us an 8 out of 10. And I chucked in an extra slide here, Willem, after what you said about the timing. You know, in the old days, you'd get involved in Facebook or Amazon once it actually IPO'd. Many of us wish we'd got involved in Uber or Airbnb in private equity. What we've allowed people to do is to go right up that value chain. And I believe our community is probably, we call them our wealth partners, which are shareholders or investors. And I believe it's the strongest asset in our company because it's 863 people that have a shared interest in making this company a success. And that for me truly, you know, is what community is all about. The algorithms, I'm not going to talk too much about them. There's our GID system. I really truly believe that one day you're going to have completely personalized service. There's a whole system that we're building out, funny enough, with an external party as well, which has taken all the stuff that's in my book, our GIDs, our 100-point system, our GPS, the global property system, everything, and we built it into the system, and we're actually trying to codify it all at the moment. Think about a day when Joe Soap or Jill Soap wants a completely personalized thing, and your technology is helping you make the right decisions for yourself. 6 out of 10 at the moment. Why? Because it's all built on spreadsheets, but it's not on the platform for users. And then lastly, the last two, leveraged assets. You know, this is an interesting one because we could go and try and do everything ourselves. We could go try find the supplier, do all the due diligence. We could try go find all the investors and do all the work ourselves. Or we could actually work with multiple supply partners, multiple demand partners, and provide the platform. And another good example is Lemonway. They're the biggest digital wallet solution in Europe. They've got something like 190 marketplaces or crowdfunding platforms behind them. They do 2 billion euros a year, and we've integrated with it. And so you've now got a digital wallet solution. We didn't have to go and create it all ourselves. And so a 7 out of 10 at the moment. And then lastly, engagement. This is one of my biggest bugbears. It's all built out, all the frameworks and the badges and the investor circles. Imagine you could invest with Willem in his investor circle, or with Ken in his investor circle, or Henny in his investor circle, whatever. And it's all engaged with badges and everything else. It's all built in terms of the theory. We need more coders to make it happen. So I'd give us a 3 out of 10 there. And overall, you can see that we're currently sitting, if you look at those metrics, at 72 out of 110 in terms of that process. I wanted to share with you, and then I'm going to hand over to Ken very quickly, in terms of the strategy which I went through last week. We've always believed that there would be a lower barrier to entry, $0 to $1,000. We called it Wealth Create. We always believed Wealth Migrate would be the intermediate, the middle class, the high net worth, the professionals. It would be $1,000 to $100,000. And we always believed there would be a higher level, which is ultimately going to be called private wealth. What's really awesome is that we've built the platform, we call the platform Wealth, where whether you've got all the different types of demand and all the different types of supply, it doesn't matter because it interfaces on the same platform. And so we call it Powered by Wealth. And when you take Investec, who's one of the people we're talking to, it's literally Investec Powered by Wealth. We've spoken about OfferNet and how it's so important, and probably Willem didn't talk about this tonight, but he did talk about it last week, which is where ultimately people want hyper-personalization. They want hyper-focus. There's no point in trying to talk to everyone about everything. They want to get specific. And if you do that, your cost per unit or your return on spend goes up dramatically. So when Willem spoke about market share, it's not just about throwing mud against the wall and hoping it succeeds. It's about being hyper-focused and getting results. Now, how do you do that? Well, you've got to speak to people with the language they understand. So we've got a global meta marketplace. We call it the Global Wealth Group. There's 4 different areas: real estate, diversification, genres, and community. At the center of it, the big center, like any wheel, you've got the platform. You've got global marketplaces, you've got local marketplaces. It's powered by Wealth. And the first marketplace we launched was Wealth Migrate, which is a global real estate marketplace. We did Genius U, which is private equity. We've done Kusa, which is a UK-based property platform. We've now done the Enterprise Property Development Fund, which is fascinating because it's BEE and allowing previously disadvantaged people access, but they've got over 30,000 investors. We're doing SAPIN, the South African Property Investor Network. We've got the Wealth Diversification Marketplace. We've got Cashbox. And I'm really excited, and Willem hasn't even seen this, and this is, it's not finished yet, but Private Wealth is about to launch. Because what becomes so interesting is that you can speak a language to a specific set, but they can use exactly the same mechanism behind the scenes. And so Private Wealth will be going live very soon now. Calio, we're looking to get live. Investec, we're looking to get live. We can do genres like millennials and wealth. We can do women and wealth. I hope, Lee, you talk about it a little bit later. The whole month we've got planned in August with women and wealth. We can have Sharia compliant. On the community side, we've got Wealth University and the Wealth Movement. And finally, with time, we can do Wealth Create, which is the $0 to $1,000. By the way, we now have a fully compliant South African solution to launch South Africa. And that's where Wealth America, Wealth South Africa, Wealth Europe, Wealth China all become a reality. These are the brands that you can see, the look and the feel, completely hyper-personalization, but then giving them what they want in their marketplace. And then this is something that I find interesting. You know, this is a $13 billion company, and sometimes you don't pat yourself enough on the back. And he literally said to us when he fully understood what we have, he said, you need to be commended. We think what you've created with a digital wallet and easy aggregation of investors is a game changer. We have not seen anything like it in the market and are excited to explore how to work with you on a significant role. They want to do $100 million a year just with us. They've got 1,300 employees in America, England, and Europe. And this is what they had to say. And we literally are looking to launch with them at the moment. So that's the overview. I wanted to share that with you. Willem, before I pivot to Ken, because Ken's going to come up now and I'm conscious of all of our time. Last week we got off the call and I really enjoyed the webinar with you, and we got off a call afterwards. And you said something to me. You said, Scott, you're sitting, or we are sitting, because we're wanting to work with you and get you on board, onto the board, and not only as advisor, but as a board member. And you said, we are sitting on a once in a lifetime opportunity, but equally, it's now or never. It's the next 12 months that are going to determine whether you turn that into a once in a lifetime opportunity or whether you, and I'm using my own words now, watch someone else do it. What did you mean by that?
Scott, we normally fight big organizations to turn themselves into exponential organizations by structuring. It's an uphill battle. We're lucky if we get 2, 3, on exception, 4 of the exponential attributes in an organization that allows it to unlock and capitalize on exponential growth opportunities. When we build organizations, obviously you can change the architecture and you can put that in place from inception, which is a lot easier than unlearning old crap and putting new modern stuff in. Why I say this is what I believe that this is a lifetime opportunity is because, one, you've just done this. You've got, in some form or another, some 8 out of 10s and some 2 out of 10s, but all of the exponential structuring attributes are prevalent in Wealth Migrate, firstly. Biggest one is the purpose. It's a global issue to solve wealth. Second, I don't think that the impact of COVID from a positive perspective is talked about enough. Companies are now forced to digitize and undergo digital transformation. And because the consumer can't walk into a shop or bricks and mortar anymore, whether that's for buying something retail or for getting advisor in person, it's gone. And even if lockdowns end, there's going to be a reluctance to go back. We'll find our new normal afterwards, if there's going to be such a thing. But the window in which the digital approach globally for wealth through an exponential organization exists, and for a long time has prepared and built systems to get ready to take off now, it's like stumbling onto a rocket that's got a fuse running out of it, and the fuse is about this far from taking off. Run, grab a hold of it, find a way of getting a foothold. And that's why I said what I said. I'm not trying to be hyperbolic about this. I honestly believe that. And if when Ken showed me the mechanism to get involved, which I think is what he's talking about now, you've made it easy for people to be a part of the ride as well. How often do all of those elements come together in a perfect storm? You tell me.
Oh, no, thanks, Willem. Over to you, Ken.
You're on mute, Ken. Ken, you're on mute still.
Thanks, Scott. And
you're on mute again. There we go.
You got us. Sorry, it might be my Wi-Fi in the UK, you know, in this developed country. So look, just looking at all of this and actually thinking about what has been said, you might be looking at this meta marketplace and trying to assimilate what has been thrown in by Willem and exactly what that means for Wealth Migrate. What I'm going to try and do is I'm going to try and take that right down to some granularity so you understand exactly what we're talking about. Firstly, let's have a look at the metrics in the business in terms of what Wealth Migrate has done. Well, the Global Wealth Group has conducted now plus $6 million in deal value via 7,500 transactions on the platform. It's got members in 152 countries and investors from 62 countries. Where Scott was saying, you know, it's exciting in terms of what you can do with digital marketing. We've only marketed in 2 of those countries. Everyone from the other 60 countries has actually found us through the website. We've raised 100 million US plus in equity through the platform to facilitate the deals of 600 million in value. And we've got a 70% reinvestment rate with an average transaction size of about 37,000. We've paid out 12 million US dollars in invested dividends to date, and 98% of the forecast performance of what we said that we would do. Do you want to comment on that at all, Scott?
Yeah, I was talking with the team today and one of our developers, and I don't think we don't celebrate it enough. You know, we've just gone through COVID and the majority of financial instruments are not paying. And, you know, our South African investment is literally exiting everyone now, and they're getting paid out there 18%. And Lyndon actually did the research, and 98% of our payments have either been on target or above target in the last 12 months. And the 2% literally accounts for one opportunity in London that we bought that got delayed in the transfer. So like the ownership process got delayed, and we lost 1 quarter. So they've actually been paid now. There's been a double dividend paid to catch up, but that's the 2%. So almost without fail, the entire portfolio of investments on the platform in the last 12 months has paid people on time to the target return or above.
Perfect. Thanks for that. Just what are the key achievements then? So that's been the sort of the performance. What are the achievements? We're just on Thursday last week, the 16th. We received a worldwide finance award for the best real estate investment platform from this publication, Acquisition International, for 2020. We got Chinese top prop tech award in 2019. We got a top 3 place in the Africa Fintech Awards in 17 and 18. We got a top 50 KPMG Global Fintech Award in 16. Currently, what the group offers is a global platform solution. And that's via its team, and that's in 6 countries, including myself here in the UK, US, Australia, UAE, and China, with its own tailor-made Mandarin platform. What do we mean by a global platform solution? So remember, Scott was referring to the Meta marketplace. He was referring to a lot of products around that Meta marketplace. Well, it's a fully digitalized, integrated solution. And how to achieve that was we needed to achieve global authorization. So we've got a fund, and it's based out of Australia, that allows investment into compatible investment opportunities, from debt to equities to structured notes and to funds. Now, I'm not just saying it, we have these products sitting on the platform as we speak. We needed straight through payment solution, or straight through payment processing. So we don't have people sitting behind us actually processing the transactions. So as Scott alluded to, we agreed we put agreement together with Lemonway, a pan-European payment institution. They are used by 1,400 websites in Europe, including 200 crowdfunding platforms with 5 million end-to-end customer accounts. They did last year 2 billion through their platform or through their solution. And basically, we partnered with them in much the same way as he said to you, we've done with, say, Creative CFO for financial accounting. Their global custodian is BNP Paribas. BNP Paribas and Lemonway had to look at us from a global authorization perspective before we could onboard. So the due diligence from that perspective was done. And then what we've created is a technology platform. We've used modular technology, meaning that it's built in blocks. So Gavin is able to get into B2B partnerships, create APIs between our businesses, new modules very quickly with his team. It's open source. So it's not all of the code is necessarily created from scratch. It's used and borrowed and put together. So a very agile process. It's based on a book build infrastructure. Gavin himself, the COO in the business, Gavin Rousseau, came from Imperio, Icrio. Icrio's programmers created the book building infrastructure for Goldman Sachs. That's back into my territory where I used to build books in stock markets. And I'm going to just stop here for a second and tell you what that actually means. What is a book build infrastructure? Well, if we left this call and you all decided that you wanted to invest in Google, for example, or in fact Tesla, because Willem has talked so highly about Tesla, and you phoned your broker and you said, give me 10,000 US dollars in Tesla. Immediately that you do that, he will give you a price. So automatically, he screen matches you. Now, ordinarily in the old days, they would have time-stamped your order. This is done automatically through screen trading. He then goes out to his counterparties, and there'll be a whole lot of counterparties, and he will match your trade. He'll give you your price, and it will be done. It will then settle in a T+3 days, and it will settle. But there will be your order will be in the system. Now, as we speak, our book build, we could go out and build a book. And in fact, we will use the system in the book build that we're conducting for ourselves now, whereby historically, if Standard Bank came to me and said, Ken, we need to raise 250 million for Sasol, 250 million US dollars for Sasol, you're in syndicate with 5 other institutions. You've got your part of this. You can get your team stuck into this. We would go out and we'd start talking to the institutions. The institutions would come in at a time-stamped fashion. Okay, so it's all done and equated, and it's all done automatically. We can now do this straight through automatically. We can do it for a transaction immediately at 10 US dollars or 10 million US dollars at the same cost. That's what the book build does for us. What that means is suddenly people are looking at going, well, could we do debt transactions through your platform? Could we do equity transactions through your platform? Could we actually have our fund, and could we raise money for our fund on your platform? Yes to all of those things, and we are doing it currently for all of those counterparties. So it provides a universal primary financial services application, and then there's scope with that for significant growth. So what do you mean by significant growth? Well, we perfectly positioned in the looming COVID-19 recession that Willem alluded to, such that the platform provides the infrastructure for local and global entrepreneurs and institutions who need to specifically monetize their existing client bases in niche markets with, say, new products or services. In so doing, the Global Wealth Group is becoming this venture builder for companies. So it is expanding the business within an ecosystem model and assisting their commercial acceleration. And in doing so, the Global Wealth ecosystem uses its tools, its digital marketing capabilities, and in turn provides them with access to a global audience, which they just don't have at this point in time. Platform throughput will obviously exponentially grow the trade in the meta marketplace. So you'll have lots of marketplaces, maybe debt, maybe equity, maybe fixed structured products, and so on, within the meta marketplace. And that's across a variety of products, a multitude of industries and channels. So we are funding ourselves up to cater for that. So we're raising 5 million US dollars in growth capital. 2 million of that is in debt and 3 million in equity. The debt product is a very interesting one. It's a convertible loan, so it's an automatically converting loan, offering investors between 7 and 10% paid quarterly for 5 years. And then it automatically transfers into Global Wealth Group shares at the current price, or at the agreed price, dependent on the level of your participation. It's secured against the unencumbered real estate carry of the group balance sheet, and hence it's offering, say, 2 times cover or a 50% loan to value. And we, as a protocol for our business, are ring fencing a minimum of 24 months of interest in escrow upfront for the payment of these coupons. How are we doing it? There's a 3-tier investor participation incentive. So if you're a silver investor, that's $25,000 plus. You will receive an interest rate on the money that you invest of 7%. Our stock price is currently $226, and we'll give you a 3% discount off that. So you'll actually buy the stock you'll participate at $220 in 5 years' time when it converts. Now, obviously, in 5 years' time, we're expecting a significant increase in the stock price. You would have been in at $220. So therein lies your capital appreciation. As a gold member, $100,000, and 8% interest rate, a 7% discount to the stock price. As a platinum member, $250,000, you get 10% in dollar terms, and a 12% discount to your share price. We've since Willem actually joined Scott last week, we've had indications of interest of $1.3 million in the debt product, about 300,000 in the equity product. That gives us headroom of sort of nearly 700,000 at this point in time. When debt closes, we'll be looking at equity. What we've done with equity is specifically made the discounts keener for the same tier of investor. So if you're a silver investor, straight into equity, you just want to own the stock and have the share price, the share certificate, basically we're going to give you a 16% discount from 25, and that's because you don't get any interest from a coupon. At 100,000, you get a 20% discount. And Scott's right, I've done just under 8 billion in my career over 85 transactions. A 27 to 30% discount is very large, but it's what institutions would initially start asking for as a discount. And so we're offering 27, and we feel that we've been fairly, pretty fair for what we're trying to do. What is the use of funds, and what is that going to mean? So what is your money going to be used for? There's 2 key areas. There's an acquisitive strategy, and then it's for growth capital and organic growth. So from an acquisitive strategy perspective, we're looking for investments in strategically aligned businesses. Now, bear in mind, we've told you that we are partnering with B2B companies. So it's giving us a forum to actually say, look, we'll take a small percentage of your business if we achieve the revenue through our business that we need. So we're looking for these strategically aligned businesses, and then commercially accelerating their metrics through cooperation and mutual benefit to both businesses via the business within an ecosystem model. So it's B2B and B2C. And that's targeting 10 times current metrics and revenue for them. Scott's told you about our metrics and our expectations, and that will create significant growth in our group valuation on the path to $100 million IPO. That IPO, we're looking at within a 5-year period. We're looking to dual list. We've top code the business in the UK. We've obviously got the Hong Kong company, and it was always for the benefit of its exposure to the Pacific Rim. And we can also consider New York, but certainly probably a dual in the aforementioned. From a growth capital perspective, we're going to use it for CapEx. And that's investment in the platform and IT and feature releases. Just interesting for you, during COVID, we've had 25 feature releases on the platform since COVID started. So it shows you how much the team is putting out consistently. So we need to fund that. We need to fund digital products. Digital products earn differently to classic marketing. because they're almost a 4-for-1. Aubrey's actually sitting listening to this call as we speak. He's taught us all of this. He, together with OfferNet and our key individual at OfferNet, is sitting on this call in Willem here. He's combined with Willem for the purpose of actually getting us to the new private wealth platform that we're launching to new high net worth individuals and to business counterparties. That will then assist in the mental marketplace rollout, and we're going to spend some of that money on global compliance and initiatives. There's all sorts of new and exciting initiatives that we can do from a sort of a European perspective and new compliance areas that we can look to. And we want to do that because obviously it's going to stoke interest through other financial service businesses and B2B partners. So we're saying significant growth in valuation. What do we actually mean by that? Well, if you came in as a 250,000 investment in the Global Wealth Group now, I've just told you that you would achieve a 20% discount, and that would give you a share price of 180. In 1 year, to our current close year, that would equate your investment to 372,000 US dollars on the basis of the capital appreciation in the stock price that we forecast. However, to look more closely at that, Willem was saying you can make quite a lot of money in the early stage prior to listing, but on a 10-year view at the trajectory, your 250,000 would be worth $7 million US dollars in the business against the current growth rate. But the Global Wealth Group's forecast revenue for 2020 is 4 million, and what that does is it gives us a valuation based on a 10 multiple of revenue of 14 million. Now, if you say, hang on a second, where does the 10 multiple come from? You don't actually need to rely on me. We raised 2.5 million through Cedars, an institution in the UK that's FCA regulated, and 863 people came into our business at a 10 multiple of our revenue when we did that raise. So we are trading on a 10 multiple of revenue. If the Global Wealth Group took just a 5% stake in a B2B partner who could offer us $1 million in revenue. So in other words, let's give him a 10 multiple of his revenue. So he's worth 10 million. I take 5% of his 10 million company. That's going to cost me 500,000. But we receive his $1 million in revenue through the Global Wealth platform. It would grow our valuation by 10 million. So in other words, immediately it would give us a 25% appreciation to our valuation. And so, what we're going to do is cherry pick the benefits. Now, a lot of this is going to come through the platform anyway, but this is a way to grow accretively. And in this way, the group can accelerate the already fast organic growth, revenue growth rate with strong acquisitive growth and then significantly grow the valuation.
Perfect. Thank you very much, Ken. So I'm going to steal it back there and just really appreciate that, Ken. And I think really what Ken summarized right at the end really epitomized, I think, why Willem and Ken got excited when they were last talking to each other a month or two ago. Because what Ken's just explained is that, you can grow organically through digital marketing, which you're going to do anyway. But if you can reach the market, what did you say, Willem? Like market reach. If you can do it at scale, where you're not just doing it once, but you're doing it in multiple occasions, helping multiple other companies, leveraging their assets, remember, then that's how you can grow, and that's how you can get that market share. And actually, you can look back at COVID and say, that was the catalyst that helped us go to the next level. So it's really what Ken's explaining. And it's also why we have done this raise, because 20 years ago, this is exactly what Amazon did. Because Amazon in 2000, you had the dot-com boom and bust, and I've told people about it, but if you literally invested $10,000 in Amazon, it'd be worth $12 million today. But what most people don't realize is that during the dot-com boom bust, their share price actually went from $76 to $6 and stayed that way for the best part of 5 or 6 years. And yet, if you had invested during that time, your $10,000 would be worth $152 billion. And what did they do? They created a convertible debt instrument. They paid 6.9% interest. They raised a couple of $100 million. And with that, they went out and they not only had their platform business, exactly what we've got 20 years later, but they built out multiple marketplaces and they empowered other businesses to succeed and thrive in this time. And today, 20 years later, we've got Amazon. And that's really the strategy that we're following. It's the platform business model where you're empowering businesses. And that's why we talk about a business within an ecosystem, or another way of doing it is B to B to C, which is business to consumer. So you're not trying to do it all yourself, you're doing it through others. So what are we doing? Just to highlight what Ken said, we've got a convertible debt loan. It's $2 million. We've got a category at silver, which is $25,000. You'll get paid a 7% interest rate, $2.20 a share, which is a 3% discount off the current rate. So imagine buying Apple shares in 5 years, but being able to agree the price today. We've got gold, which is 100,000 and an 8% interest rate and a 7% discount. And we've got platinum, which is a 250,000. It's a 10% interest rate, Class A shares, and a 12% discount. Now, what's important is that last week we had some preferential treatment for people that got involved early, and we were quite overwhelmed and grateful that there was huge interest last week. In fact, we got over $1 million in terms of interest of where we're at. Now, what's important for investors is that it converts within 5 years. The second thing is that we're going to protect the income, we're going to keep a minimum of 24 months interest in the bank in a separate escrow bank account so that the income is protected. The capital is also protected against the real estate assets. So we've got an asset register that we can share with investors if they want. Conservatively, our assets are $3.5 to $4 million, depending on what valuation you want to ascribe them to. If we only borrow $2 million, that means your loan to value is 50%, or you've got a 2x cover, whichever way you look at it. And then finally, as I said to you, we had the preferential terms for the first 500 and for our wealth partners. And it is on a first come, first served basis. But my understanding, I would talk to one of the wealth consultants, but my understanding is that this is all taken up. Now, what's important is that literally in terms of the next steps, you can go to the landing page. Okay, so if I just share with you, and Lee, if you wouldn't mind just putting the link in, or I'll put it into the chat box. But actually the landing page is here. We've got a video that Ken and I have made, and it actually explains. You can download the fact sheet. There's actually a fact sheet which explains everything that Ken and I have spoken about today. And you can read all about it. You can read about the meta marketplace, the use of funds, the financial summary. And then you can also see, so the black and white, the black and gold is about the Global Wealth Group. And then the blue is about Wealth Migrate, the marketplace of Wealth Migrate. And then, as we said, the purpose that Willem has said that is so critical. So that's really where you're at. And then you can go and you can read all about it online here. But the most important thing is to connect with one of our wealth consultants. Actually go and see what the other wealth partners have had, what it means to them. It's really quite a special experience, and one of the things that I'm most grateful for. So this is, speaking to the wealth consultant. I'd highly recommend it, and you can book a booking on the platform. You can also go to the platform. So we've got the wealth diversification marketplace. One thing that Ken, I loved it when you epitomized it so well. You basically said, the one thing that's awesome now with regards to the platform is that, we're not just talking about it, we can actually go and do it. You can have the multiple different products. So next week, we're going to have the structured note from Cashbox. You can actually see it's here from Credit Suisse. You can go and read and do the convertible debt, or even you can look at the private equity. You can go in, you can log in, you can see all the different details. If I go into my personal name, which I've KYC'd, I've got access to all the information. By the way, I'm not sure, Willem, if you've even seen this, but I can go in my bank account and I can check, and it's got the currency conversions automatically, and all the, talk about being a global citizen. I can now have everything all in one place in my digital wallets. And whether I'm investing in structured notes, medical properties in America, aged care in England, or even convertible debt instruments, it's all in one place. And then finally, some people just wanted to reach out to Lee directly in terms of her WhatsApp. She's head of our community, and that is her number. And then to give you an indication, the debt related, so the convertible debt, we've actually had pledges up to 950 at the moment. So there's about $1 million remaining. We've been quite intrigued, as I said, by the demand in the space, which is fantastic. And we do have signed contracts for equity for 3.25 million. As we said, our total, we're looking for a $5 million raise, 2 million in debt, 3 million in equity, so that, as Willem said, it's a once in a lifetime opportunity. I, by the way, agree with him. I've been saying it for a long time, but I'm more excited now than I've ever been based on COVID, because, you know, you made a comment, Willem, which is where luck is where preparation meets opportunity. And this team has been preparing for a long time. And COVID is the opportunity creating that catalyst. And that's really what I'm super, super excited about. And if you told me 10 years ago it was going to take 10 years, I might not have had the persistence. I might have been one of those guys that when you gave me a dodgy bike, I might have got off. But 10 years in, we've invested a huge amount of time. We've built up a global community, and now it's time to win. So that's all from myself. What I'd like to do is leave up this page if anyone wants to see what the calls to action are. And if there's any questions that people have, you know, let's run into a Q&A. I'm conscious of the time, but there was so much information we wanted to share tonight. So there's a question here from Anonymous who said, may I ask what the initial fee would be and ongoing charges, fees for investors? So for Anonymous, there is no initial fee to be able to invest through this process. And you'll be getting, if you invest at the silver level, you'll be getting a net 7% return. If you invest at the gold level, it'll be a net 8% return. And if you invest at the platinum level, it'll be a net 10% return with no charges. Okay, let me pull up the Q, not the Q&A.
Scott, just, I don't know if we mentioned it, but that interest payment is quarterly, right? Just for cash flow planning purposes.
Correct. So it is quarterly. And again, you know, there's two things that we believe that, well, three things actually that investors are looking for at the moment. They're looking to protect their capital first. So that is why the debt component is $2 million, so that there is the cover where your capital is protected against the real estate assets. The second thing is they're looking for income. And again, we literally copied what Amazon did 20 years ago to provide not only the growth opportunity. So as Willem, you said, now's not the time to hunker down. Now's the time to go after the opportunity. But in parallel for the investors, they want an income. And so we want to pay them a return. And thirdly, you know, allow the investors to share in the upside of what is possible, basically. Okay, there was a question earlier from Chad, right earlier, which I just want to find for you here. And he said, what do you think, Willem, is the best currency to invest? Let me just get the question come up here quickly. Where's it gone now? Oh, can't find it now. Anyway, he pretty much said, what do you think is the best currency to invest over the next 3, 5 to 10 years?
Can't answer. I am not a currency trader. I think there are people that are a lot smarter and more versed in this space. If you asked me 8 months ago, I would have said the greenback. But the greenback has now got a white head that's doing weird things. So I don't know. Even those fundamentals are being rewritten. I like yen, to be honest with you. And in the crypto leverage space, yen looks like a good intermediary currency. There's a lot of interest rates around it. The Japanese have always been disciplined, but that's not a technical answer that I'm giving you. It is totally intuitive. I'm not a currency guy, not a fiat currency guy.
It's interesting. So, you know, I don't know, Ken, what your thoughts are on this, but in simple terms, there is a guy called James Painter, and we did a webinar with him about 2 months ago. So if you want to, you know, reach out on our community and ask us. And it was really interesting. He was very bullish on the euro against the US dollar and how it was actually going to improve by nearly double over the next 5 years. I do think one thing that's important, though, coming back to Ray Dalio's comment, you want to be able to diversify across asset classes, across countries, and across currencies. And really, that was very difficult to do 10 years ago. Now, actually, it's becoming, you know, quite a lot easier. You know, through a platform like ours, you can actually do it quite safely and simply, and be able to get access to it. So, Chad is one of our, and I know Andrew's online. I don't know, Ken, if you've got any comments on it.
I'll just, look, I'd make these points, Scott. Firstly, if you have a look at the injection of QE, quantitative easing, basically, by the US and by the UK and sort of globally. First in the, global financial crisis and then now. What you got to think about is on the, in the global economy, which markets are going to be most affected? So the US can put in 3 trillion. What actually happens to the US's sovereign rating? Well, it goes from AAA plus to AAA minus. If the US comes unstuck, what will it do to actually make its money back? Generally, it's got a couple of avenues like everybody else has. It's got activity around monetary policy. Okay, it's got FDI to attract funds back into the market, or it goes to its population and actually taxes them. Now, the fact of the matter is that when you're running a country with a sovereign risk that basically is considered no risk relative to countries where there is more risk, then you're obviously going to be more palatable as an investment. And so you've got to look at the the COVID stats as they're coming out. Have a look at the top 5 economies and see how they're making their way through this, and decide. I mean, it's got to be hard currency. The greenback has done well, as Willem has said, to a point. James Painter was talking about possibly, certainly from a rand perspective to US dollar. I was surprised he was saying that there should be some form of a rebound. If we're talking strictly South Africa, I've made my points fairly clearly. There's a big fiscal deficit. There's a massive current account deficit in the South African circumstance. COVID could double peak in the country, and will the facilities in the country actually stand up? And the point is that South Africa's sovereign rating is junk. So how are you actually going to invest up and fund that? So my point would be, I very clearly feel that there's further depreciation in my understanding relative to the global crisis. But again, let's provide James's details.
A couple of questions. And Ken Mayer said, how will my shareholding with Cedars be affected? So Ken did it at the same time as Cedars. So it won't be affected at all, Ken. In fact, it will be supercharged. So the whole idea here, in the same way as Amazon, we're looking to raise growth capital to really take advantage of the opportunity now. A lot of the technology, the cloud compliance, the digital wallets are in place, and the marketplace rollout really becomes a reality. And conversations with the likes of Willem and others is, how do we onboard? Just last night, Willem introduced us to a company, and they're looking to raise capital for another 2 companies. And it's interesting how the conversation just segues. But it's like, oh, we can help you. We've got a platform, we've got compliance, we've got digital wallets, etc. And so, the opportunity actually is a hell of a lot bigger than I originally foresaw, where I thought, and I've said to people, the Amazon of real estate, and people powered that vision. Well, why does it only have to be real estate? Why can't it be private equity? Why can't it be structured notes? Why can't it be other asset classes that are all in the primary markets? And that really is why we've changed this to Amazon of personal wealth. And why, at the core, it's being driven by the platform called WealthE. So, yeah, Ken, I think it's exciting. We can talk a lot about that. Ken Williams, I think, alluded to it tonight. Just to give you an example, if our revenue is $2 million, that makes our valuation $20 million. If we can bring on a partner that brings another $2 million through a platform, that doubles the size of our company. If we can bring 5 of those on in 1 year, that 5x's the size of the company. Or actually, in terms of valuation, it 5x's the size of the company. Now, there's no reason why, with this firepower we're looking to bring in, we can't do that over and over and over again. And as Ken Williams says to me often, stop thinking too small. Stop trying to go, from 2 million to 4 million. Why don't we go from 2 to 4 to 10 to 50? But we're not going to just do that organically. We've got to do that accretively, which in simple terms means strategic partnerships. It means acquisitions and mergers, basically. And really, I believe that 5 years from now, there'll be a global player. and it won't happen through the company that's got the most money. It won't come from the company that's got the most knowledge. It'll be the one that is the most strategic to take advantage of this opportunity.
I could just add, Scott, there's just one other thing we recently had a very careful consideration of our sweat equity, and we conducted a clawback on previous holders for delivery reasons. We were able to do that. $3 million US is available. So basically, in funding 3 of that will be non-dilutive. Only 2 of it, and Scott has already passed through our AGM, and he did this a year ago. A further issuance of 1.3 million shares. You can tell very quickly that at a share price of 2, you're talking about 2.6 million. So we would add on a further say 1.5 million. So it's very, very moderately dilutive, but bear in mind that the sort of the financial ammunition that he was talking about could very much kick us up in terms of revenue and valuation.
Wayne has said, excellent opportunity and super returns. What if there are most obvious risks if I was to share this opportunity with some investors? So I think, Wayne, I could ask that today. The way I see it, there's 3 risks for people to take into account. The first is that should the company not be able to make the revenues, etc., how do they pay the interest payment? And that's one of the reasons to give people that peace of mind. We'll have a minimum of 2 years actually stashed away in a bank account to enable that to happen on a quarterly basis. The second would be, how is my capital protected? And that's the reason that we, let's just say arguably that the real estate value is $4 million. And let's say we get into an arm wrestle and prices come down or whatever, and it's not actually 4 million, it ends up being 2.5. Well, that's why we made it, the debt portion only to 2 million. So there was plenty of cover. And obviously the risk would only be if the real estate value was to more than half below the $2 million. And the third one, and the obvious one that Willem spoke about to some extent, not just us, but any company, is whether we can actually execute and turn the opportunity into reality. And that obviously is the risk of any private equity. But hopefully Willem's given you some tips on how to pick the horse from the ponies. And by the way, we're certainly not a sure bet. There is no sure bet in business, and particularly when you're carving a new path through the jungle, there's no such thing as a sure bet. But as Peter Diamante says, it's a crazy idea until someone does it. So Gary's mentioned what you've already mentioned, Ken, that in terms of the virtually limited, if any, dilution. Ansie's asked, what are the income tax implications of transferring funds from a current investment to Wealth Migrate? Ansie, it's very difficult on these type of presentations to give tax advice or structuring advice because we've got members in 152 countries. So I'd need to know where you live and what tax regime you're in. We don't ever give tax advice. All I could do is give you my own personal opinion on what I've done. But if I understand your question just at a simple level, there's not normally tax implications of transferring funds into the investment on Wealth Migrate. But we would need to have probably more of a one-to-one conversation around that. But there's no tax implications. The only one that I could probably talk to is where my brother, as an example, had his money in a pension. And if he banked his pension now, I think he paid about 40% tax on his pension to be able to get access to his capital. And me and my brother decided together that would make more sense for him because we're from Zimbabwe and we've seen how well pensions went in Zimbabwe. And so, with government funding, or run by governments. And so my brother actually 3 years later couldn't be happier than Larry. He's investing on the platform. He's got multiple investments. They're small by global standards, but by him, they are very great investments. And he's completely in control of his destiny. But I don't know if I'm answering your question at all, because I've got no idea what you're talking about with tax implications. I just get passionate about people being in control of their own destiny. Rachel said investors in the convertible loan will automatically have their investment transferred to GWG equity upon closing. So that's correct, Rachel. And that's why we're fixing the price. So the way convertible instruments normally work, if you look at Amazon even, they said favorable structuring terms. And what it generally means is like 20% below IPO price, which basically means that you fluctuate and you take the debt because remember, debt comes first in the queue in front of equity, so it's less risk. You get the interest payment, and then when it IPOs or whatever, you get it at a 20% discount. What we're offering to people is much more fixed, where we're saying, look, this is the share price today, this is the discount we're offering you, so that you can ride that journey for 5 years, but you know what the actual share price is. And then everything that we're predicting in terms of our target returns would all be on the upside. And equally, it makes the instrument convertible, so that for the company, it's better to plan. So again, Ken, when we're doing the cap table, can plan because we know how many people are going to convert. And equally, for the investor, they can plan. Wayne said, appreciate the clear response. I do love your guys' work. I agree, there's no crystal ball. So yeah, it's definitely not 100%, but hopefully, one of the reasons that I like to partner with people like Ken and with Willem is that they bring their own unique skills to the table, and no one individual is going to win this race. It's impossible. The only way to do this is to bring collective minds from different mindsets, different backgrounds, and even different geographies together to find that solution. And that's really, to what you said, Willem, I can't guarantee people's success, but I can guarantee we'll die trying.
Scott, if I may, I also just wanted to say to Wayne again, an insightful question. If Wayne, if you've got guys that are interested to have a look, there's no pressure, there's no solicitation from you. You could just say there's a very interesting guy in Scott Picken. If you want to talk to him, he would be open, or a member of his team would be open to have a chat. And it's a very respectful discussion. If that person decides to invest, at least you've given them the opportunity to have a look. And when Scott talks about community, that's really what we're asking of the community. We're not asking for you to go and find us investors. It's much more about saying, look, if there are people that actually are worried and they're trying to diversify, and I've seen a lot of it recently, this is a good opportunity. And it may not be for everyone. That's not a problem, but we could at least talk to them and take them through the thinking.
And see, my suggestion is, rather than trying to give you tax advice on a public forum, let's reach out to one of the wealth consultants, and I'm happy to talk to you myself and try and point you in the right direction. I've been investing internationally for 20 years as a South African, so I know I've made enough mistakes to at least point you in the right direction. There's a lot of questions here, Willem, about your story to space. And as we're coming to the end and almost on the 2 hours, tell us a little bit about the story to space, because everyone's fascinated about what a true rocket scientist actually does.
Okay, so let me just dispel one myth quickly. Space starts at 80 kilometers away from the planet. 80, 81, 82, 83, because the Earth is obviously not flat, contrary to some of the belief articulated nowadays. So 80 to 81 kilometers is the beginning of space. 100 kilometers is the beginning of the end of the atmosphere. 103, it's over. If you're moving forward at the same pace as what you're falling, it puts you in an orbital pattern. And in the early days, you could get to that sort of what they call VLEO, very low Earth orbit. Interestingly, if you want to get there, you've got to go through civil aviation airspace, which has as an emergency procedure, put your head between your knees, brace. Then you're into the military zone, which is get off the plane, so take the parachute and jump. Then there's the International Space Federation airspace, where if your vehicle gets into trouble, you've got to hang on until you reach an altitude from which it's safe to jump off the plane, failing which your body might disintegrate. And so interesting to go through the security briefings associated with going through these different tiers, which takes a long time and is nerve-wracking if you think about it. There's a very real chance that you're not coming back, or in one piece at least. Then there's some other interesting things that happen. At that altitude, you're able to see the curvature of the planet. There's a thing that a lot of astronauts or quasi-astronauts or wannabe astronauts talk about, a moment of relativity, which is where you consider your life, because you look out the one window and you see the infinity of space in high definition with no atmosphere between you and it. And mathematically, if you look at infinity, you wonder, are we alone? You get through some existential questions of what is all of this all about? Why is there life? What's the purpose of all of this? You drift over to the other side of your craft and you look out the window and you see there's everything that I've ever thought about, or any thought that I've ever had, any humor, anything I've laughed at or cried about, any emotion that I've showed is a result of something on that planet. You look at that, you look at infinity, and you look at that, and you look at infinity, and you just realize how insignificantly small we are. And one of the things in contemplating your existential existence, which all of, by the way, happens in high adrenaline state because of this massive experience. And so people shout very weird things and sometimes profanities, and some oaks get sick, but you're in gravitylessness. And so if they don't make the bag in time, you can imagine what that colorful collage looks like. But you get to some other stuff that you wonder, how great would it be if we could find something in the universe that's also alive, but looks significantly different from us. Maybe more legs or more eyes or double heads or whatever it is, like bizarrely, just very different from us, which perhaps gets us on a path of thinking that we're, as humans, not that different. And somehow over time, we've created these barriers between ourselves, culturally, demographically, economically, and hate has filled up some of those gaps, and conflict. And if we could just find another common enemy, maybe that'll help unite some of humanity and just make us realize that everyone's blood's red, almost said green. Everyone's blood's red. And as a species, we're actually not that different. It's just it's a little bit of hue and a little bit of how you sound, but in the main, we're actually the same. And maybe that could be a unifying thing. There's some videos that came from that experience, which which also you have to play with the sound off. Yeah, very enlightening. Once in a lifetime opportunity as well. Well, maybe not, the way things are going, who knows? In 10 years' time, we're all doing space travel.
Awesome. So a couple of comments about partnerships will win the game. Completely agree. And that's why our meta marketplace is so important, because it's actually about teams working together, businesses. And again, as Ken said in his talk, it's not even about just ranked startups. It can be highly successful businesses, but actually bringing them into the ecosystem. Susan, I did answer your question, but in terms of the investment term, etc., my suggestion is let's chat one-to-one and understand what you're looking for, and we can see if we can help you. Rachel asked about the structured notes. So next Wednesday is the webinar with Chad and Andrew around structured notes. It's a fascinating investment vehicle, and again, one that on the platform you can actually go and now build out different. You can build out your own diversified portfolio across different asset classes. And I think, ladies and gentlemen, on the 2 hours, we've actually concluded with all the questions. So my suggestion is that we look to wrap up. I really want to thank both Willem and Ken for their time, and for everyone else, Lee for putting it together, and everyone else that has been here. I would recommend doing that test. I've got the PDF version. I'm old school, not an EXO. If you want Willem's EXO test, which is online, he gave you the link, but Lee will send out a follow-up email so that people can get whether they want to use the PDF or the Google. I would recommend you do it. Just do it. It's even if you're going to get like 2 out of 70, it doesn't matter. It's really interesting to know what you should be looking for. I actually, and it's something I want to get us doing again, actually, since 2014 or 2015 plus minus, when I read that book, I got our board and leadership team to do it every quarter, because every decision you make, it then helps you think like a EXO in terms of that process. The why do you become a shareholder? Well, Ken alluded to it. It's the profit. You want to 10x your investment. It's the global community where you get to learn, grow, and invest with like-minded people. We're all in lockdown, but how do we work with the best people globally and come together and not only make a profit, but also solve a purpose? And then finally, the purpose resonates with you to solve one of the greatest challenges on the planet and allow the 99% to be able to invest like the top 1% using technology and smart investing. And we find that people that resonate with all three of those make good wealth partners. Those that don't. And then, Willem has already said, but the definition of luck is when preparation meets opportunity. I want to leave you with a closing thought.
Oh, to continue.
Pardon? And that is what Peter Diamante said. The world's biggest problems are the world's biggest opportunities. Well, if we consider the global collaboration that was done through the UN, the biggest problem on this planet is poverty, the wealth gap, wealth inequality, and by this very metaphor, or by this very formula, if it's the biggest problem on the planet, it also presents the biggest opportunity of our lifetimes. And with that, I invite some of you to join us on the journey if it fits well for you. For those of you who don't, hopefully you've enjoyed the presentation tonight, and if nothing else, got an insight into where the future is and why COVID is going to be a blessing, not a curse, in the next 5 to 10 years when we look back on it. Lee, Ken, and Willem, thank you very much for your time. Any closing thoughts?
That's good from me. Thank you very much for your participation. Great to be on this with you as well, Willem. Great to listen to you. Thanks very much.
Thanks very much for having me, and nice to be online with all of you. Wonderful put together, Lee, as always. Thanks very much, Scott, for the opportunity.
Excellent.
Thanks everybody for joining us online. To Ken and to Willem, thank you so much. We really appreciate your input tonight. It's been fantastic. The comments that are coming through are amazing. So as Scott alluded to, we will be having our Cashbox webinar next week on the structured note. So please look out for the invitations for that. And for the month of August, every Thursday, we are going to be having a powerhouse woman come and chat with us. Please, it's not only for women. We invite all the gentlemen in our community to come and learn from some of the amazing women that we have that's going to be speaking to you. Hilda Landerstead, Janine Basil, Anne Wilson, to name a few. We've got some others up our sleeve, so look out for our posts on that. We look forward to sharing with you. Hope that you all have a fantastic evening. Be safe, be blessed, and we look forward to seeing you online soon.
Thanks a lot, everyone. Cheerio.